Hello and welcome to another edition of CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, December 1st, 2008. We start in Australia, where the manufacturing PMI fell for a 6th month in a row in November, as the index dropped 7.7 points to 32.7. It's a fresh new low for the series. The global economy continues to sputter, driving down consumer and business confidence, which is being reflected by weaker demand for manufacturing products. This is a theme seen throughout the major economies in November. In a second release, company profit growth slowed in the third quarter. Profits were up 5.2% compared to the 15.7% seen in the second quarter. Meanwhile, a measure of inflation in Australia was down 0.6% in November, easing the pressure on policy members that meet later tonight to decide on interest rates. Expectations for the interest rate meeting is for a 75 basis point reduction to 4.50% from 5.25%. The Aussie-Yen pair fell in overnight trading, testing support around the 60 level after a more than 200 pip slide. From there, the pair consolidated. Stocks in Sydney and Tokyo were down around 1.5%, while European and U.S. stocks saw much deeper declines. That attributed to an increase in risk aversion and gains by the yen and U.S. dollar. In the Eurozone, the final version of manufacturing PMI was revised down from its preliminary version of 36.2 to a series low of 35.6. In October, the PMI was 41.1. It's the 6th straight month of contraction, as all the survey's indexes declined to record lows. Eurozone manufacturing is suffering as both export and domestic demand has collapsed in the face of the growing impact of the financial crisis on the real economy. The ECB will be forced to respond to the weakening state of the economy by accelerating its pace of interest rate cuts. The central bank meets on Thursday, where it is expected to lower rates by 50 basis points. The Euro-Yen pair plunged 370 pips during today's session, falling from 121.40 to 117.70. Key indexes in Europe were off more than 5%, as the weak manufacturing data surprised forecasts on the downside and joined news from the UK, China, Russia, and the US also showing record-paced contractions in manufacturing activity the last month. The euro was already falling to end last week, and its next key level of support is at the 116.50 level. In the UK, the manufacturing PMI slid to 34.4 in November, a bigger than expected contraction and a record low for the 16-year-old series. The weak results hurt UK stocks, pressured the pound, and increased speculation that the Bank of England will act even more aggressively in its interest rate meeting on Thursday. Total net lending to individuals in the UK increased by 1.3 billion in October compared to September. That was a sharp drop from September's figure, as mortgage lending fell to a meager £500 million. The number of loans approved for house purchases slipped to 32,000, a fresh all-time low. With poor UK releases from the manufacturing and housing sector, and risk aversion dominating overnight and New York trading, the pound plunged more than 800 pips versus the yen, wiping away the rally that had started on November 21st. The pound-US dollar pair started the week at the 1.54 level, broke support at 1.5250, and fell to new support at 1.48, a total change of 580 pips. Traders are betting on a more aggressive rate cut by the Bank of England. The euro-pound saw a large move as well, surging 270 pips from its open near 0.8240. The up move wipes away about 4 sessions of gains for the pound, and the pair is now back to its level seen to start last week. Traders are most likely expecting bolder action from the Bank of England than they are from the ECB this week. In the US, the ISM Manufacturing Index contracted in November at the fastest pace in 26 years, adding to the woes facing the U.S. economy. The financial crisis has seeped into Main Street as retail sales fall and household spending is being curtailed in the face of weakening economic activity. In response to weaker sales and demand, companies are cutting production. The news will add pressure on policy members at the Fed to continue lowering rates and will also put pressure on the government to pass some kind of package to stimulate the economy. The Dow Jones Index opened to a 400-point drop, continuing a sell-off seen in Europe. The Nasdaq and S&P indexes, and oil as well, were off about 6% as of 3 p.m. Eastern. The dollar-yen pair fell 220 pips as investor sentiment soured, before finding support at the 93 level. That's the lowest the pair has been since October 28th. Tonight, as we mentioned before, the RBA will decide on interest rates, so there's a chance that there may be a bigger than expected rate cut. Also, Australia will post its retail sales and current account data. Overnight, Switzerland releases consumer prices, the Eurozone will release producer prices, and the UK will post construction PMI. There are no major releases scheduled for tomorrow's New York session. And that wraps up today's action in the Forex markets. Thank you for joining us here at CMSFX.com. Hope to see you tomorrow. Have a good evening and happy trading.